Now, when we're looking at a portfolio or constructing a portfolio for a client, often people want to take a total wealth perspective. What does that mean, and how would an advisor do that?
Yeah, well, the thing I'd tell people is that if you're familiar with the concept of a completion portfolio is a portfolio that you would put together in order to sort of complete a financial plan for somebody who can't trade certain assets. So the important thing to realize is that everybody coming to you already has assets that can't be traded or aren't easily traded. So I had mentioned their human capital, all of their future labor income. They can't trade that, but it has value and it needs to be incorporated into the recommendation. They have a house, they may have other assets that are not particularly liquid. And these things need to be taken into account when you're giving somebody an asset allocation. So you don't just want to look at in isolation, what is the best portfolio for this person to have if in fact they have these other assets. So the total wealth idea is that idea that you're looking at all of the sources or potential sources of income for an individual. And actually to extend that, and we're doing more work in this area with our new what's called multi-goal methodology, we're incorporating debt as well. So ideally you want to take that into account as well. So an obvious example is somebody comes to you with a portfolio, but they have an enormous amount of debt, and the debt is costing, maybe it's credit card debt and it's costing like 12%. The amount of what they're going to make on the market on a risk-adjusted basis is not going to be able to justify not paying that debt off. So taking into account both their assets and their liabilities is quite important, and that's part of the total wealth concept.